Let's start off with that interest rate decision yesterday. We had rates pretty much in line with expectations, being left unchanged at 6.25%. Market reaction to that decision?
I think market reaction was, as you said, it was expected, so there's not much market reaction to it. I think what was interesting were really how close the vote was. I think it was only one vote in it, that I think it was 6-4, sorry, 2 votes in it to maintain the same rate. So we expect probably in the future for the rate to go up. I think the narrowing of the corridor was interesting as well, and the fact and the comments made about supply side deficiencies such as energy and the food sector as well.
Of course, also comments made about Amcon and what this means for the banking sector, what this means for minority shareholders in these banks particularly. We had an interview with Governor Lamido Sanusi just played out, and he's highlighted that these shareholders would have nothing if government stepped in. This is really the lesser of two evils. Your view on that commentary?
I think he's just trying to pay a reality check to the shareholders, because there's been a lot of talk about minority shareholders and their holdings, and he's just trying to make a reality check, especially in this time when negotiations are going on with strategic investors, because you don't want a situation where minority shareholders have unrealistic expectations which could forestall any agreement coming to play. And in that sense, I think he's just trying to set expectations.
Just taking a look at, how they're venturing into these banks. Another comment that he made and to note is that the Reserve Bank is pretty flexible on the instruments that they're going to be using. They're not focused on profit making as much as they are as purely recovering these banks.
Yes, I mean the size of the recovery that we require, the size of funds that we required. I mean, 2.4 trillion is bandied around. It's quite large. So I think the Reserve Bank has to be quite flexible in what instruments they make. In the sense that they have to get those banks back into a stage where these strategic investors can invest in it, and the next stage would to help nurture those banks back into a healthy state. I think having as many tools as possible is very good by the central bank.
So let's take a look at some of the trading activity we've seen on the NSE this week so far. I mean, we've had some of these banks really coming under pressure, rescued banks most especially after the strong rally they've enjoyed over the recent past. What are you making of that kind of activity we're seeing filter through?
I think what we're saying is that the original rally was basic sentiment based on Amcon announcing pricing and expecting Amcon inflows. I think reality is now setting for a lot of investors, and they're trying to take profits. A lot of those investors, especially now, know that they are going to be minority shareholders in any new institution that comes out from the negotiations that are going on in play. And so there's some that are just trying to take their profits now. I think also investors are also looking into the medium to long term now. They're assuming that Amcon and strategic investors will solve the immediate problem. But what next for Nigerian banking? In the sense that in banking, normally internationally, there are 2 main areas where banks make money, which is consumer credit and loans to the corporate sector. Now, there's no real consumer credit market in Nigeria, and loans to the corporate sector, as you've seen in the slowdown in credit to private sector, means that the growth for these banks is very limited. So I think there's some reality checking in for most investors.
So with that being the case, how are you playing the banking space right now, Kayode?
I think in terms of the rescued banks, I have no interest in the rescued banks at the moment.
Is that purely because there's a lot of speculative activity around these banks right now as opposed to fundamentals driving things?
I think it's that, as well as these negotiations they're having with strategic investors could be long drawn out, because there are a lot of interests that have a hand in this. I also think in the medium to long term, once these banks are sorted out, how are they going to grow? Because in a sense, where is the growth going to come from? Because there's going to be more competition, especially a lot of them are going for this regional banking model. And the regional banking model is going to be placed in probably about 2 or 3 regions. Now, there's going to be a lot of competition in those regions, and how they're going to stand out from the rest of the crowd. I don't think that's been made plain.
Mm-hmm. So looking then at your tier 1 banks, I mean, do you have stock picks within that space?
I think with the tier 1 banks, I'll look at the likes of GTB, which have always had a consistent strategy going forward. First Bank, which was one of the first to come out with its holding model that seems to make sense and seems to have a strategy going forward as well. I think in terms of Zenith, very strong in the FX market and very strong in the corporate market as well. They seem to be pushing on quite strongly. I think some of the other tier ones, the strategy is a bit muddled at the moment, so those I'll be avoiding.
What's your view on a player like Fidelity Bank? Just this week we had AfriInvest raising its recommendation to buy from Accumulate at Fidelity Bank specifically. What's your view on that bank right now?
Fidelity needs an acquisition. Fidelity is one of those mid-tier banks at the moment which really should be looking to acquire one of the distressed banks to take it to the next level. If it doesn't acquire one of the distressed banks and starts relying on organic growth, it will probably stay in the mid-tier level going forward. Now, the mid-tier banks, what is their niche? It's very hard to see, especially if they're not concentrated on something like maybe corporate investment banking. So I think Fidelity really needs an acquisition to kick forward. And if it does acquire one of the distressed banks, then that could be a big push for it. If it doesn't, I just see it oscillating in the mid-tier position.